All right, guys, this is Chris Trade. It's the 24th of February, 2021. So quite a lot has happened since the last weekly update that I did, particularly involving this gentleman here, who is Jay Powell, the Fed chair. You'll notice, if you're paying attention, that a lot of the markets were pretty much in red yesterday, particularly the crypto itself. They've been in red. There's been quite a correction that has happened in the past 3 days, particularly with the crypto side of things. But all major indexes around the world was in red itself. The only asset classes that was in the green was commodity. That would be silver and gold. But funny enough, also the banks, and people were kind of moving their monies to assets that was attached to the real economy. So that's what you were seeing yesterday itself. But the Feds came out. They were quite dovish about the economy and trying to smooth fears itself. And the Europeans were, particularly the European Central Bank, was actually freaking out, and we'll get back to that in a minute. Particularly, all eyes was all about the inflation. So as signs of the economic life have picked up, and the government has pledged trillions in additional stimulus, some say that a boom could be brewing. So you got to put this off the backdrop that yes, the Feds have pledged trillions in additional stimulus, but also the US is moving out of the lockdown. There's vaccine rollout, so there's a lot of optimism, particularly in the economy. And this is why, if you have a look at the 10-year yield itself, why you had this breakout, and it's still potentially going up, but there's still that fears of inflation. So the Fed's not too concerned right now with the inflation calls itself. So hence why they're taking a bit of a dovish approach to things, and I'll explain my basis points in a minute. But pretty much the Fed officials appear more cognizant of the outside impact of the US monetary policy on foreign economics today, and might move gradually in parts of their sake. Because as I mentioned, the European Central Bank was kind of freaking out that the 10-year yield is going up in the US, but also now, because it's pulling up all the other yields around the world up with it, particularly notably Germany, just did a surprising rise. And it's kind of freaked out the Eastern, or the ECB, the European central banks. So as you can see, bond yields remain near historical lows. A year into the pandemic, the monetary policymakers are expecting to push back against any sign of higher borrowing costs, while the global economy remains in a fragile shape and vaccine distribution efforts struggle offset the threats of new infections. So this is what's happening from a European perspective side of things itself. So they are kind of freaking out a bit with regards to the 10-year yield and what the Fed's going to do. But you'll see that the Feds are pledging about 120 billion a month for government bonds purchases. So he's trying to appease the Europeans as well, but also trying to maintain confidence and sentiments in the economy back in the US itself. So this is what is actually being planned out. If we have a look at the Steady Eddy, this is the Bloomberg Index. So stable financial condition gauge against suggests we remain in easy money territory. So they've compared this with three indexes, the Bloomberg Eurozone, the GS US Financial Condition Index, and the Bloomberg United States Financial Conditions Index. So pretty much what this is telling you is that the markets are feeling still fairly bullish itself. My base points right now is the Feds will really only bring their bazookas and their helicopter money and particularly their nukes into the fray if one of the financial asset classes fails. And the particular asset class that I am referring to is the NASDAQ itself, the US indexes, because there hasn't been a healthy pullback from this rise in reg at all. It tried to do that, but then it went back in. So there hasn't been a healthy correction at all. So, it's the US market itself, it's equities and so forth. It's kind of teetering, if I can put it that way. So you just got to keep your eye out on that, particularly if this starts moving down a bit. You'll start seeing the Feds bringing in their nukes to try and arrest any further downslide. From the EU side of things, they would like to see the Dixie to start pulling down a bit from their side, but we'll see how this plays out itself. If we have a look quickly across the markets, this is the Asian markets, pretty much a sea of red still. So not really looking good. Majority of their tech stocks have been hit. If we go to Europe, again, Europe is back in the green again. We'll look at the FTSE 100. So it's in the green. Pretty much Ukraine, Sweden, Spain. If we go back up. And we have a look at the DAX, the German index. Again, their major indexes is up. With France, the CAC 40, again, that's up. So Europe is pretty much happy with what the Fed had to say and what the EBC had to say. So yeah, things have kind of like settled down, and there's still a bit of confidence in the markets right now. So as I mentioned, oil pulled back yesterday. The reason for that is particularly there was a report that actually came out yesterday saying that, well, look, we've actually still got quite a bit of stockpile. So that's didn't really help on the supply and demand side of things to push the prices up. It actually pushed the price down itself. But having said that, you've got the potential of the US dollar getting weaker. As mentioned, the oil is moving into a 12-year cycle, a super cycle, and a bullish one at that. So hence why, again, you are seeing a breakout. So if we go back to oil, it's broken out of its descending wedge here, and this is very bullish sign. So we could expect a quick rally there itself. So just very quickly on the crypto, we've had the world's first Bitcoin ETF that was launched in North America. I think this was actually in Canada itself. There's a second one that is coming, and I think that was actually launched today. But there's also a third one, third ETF that should be coming. So this is very good news for Bitcoin. More good news for Bitcoin. Square, Jack Dorsey has invested another $170 million into Bitcoin. Again, Microstrategy buys more than 100 billions worth of Bitcoin. So they've invested more itself. So Bitcoin, again, is just looking very bullish. They were obviously buying the dips itself. Very quickly, if we have a look here on the African continent, we are seeing that Standard Bank Group establishes Africa's first Hydera network node. So I thought this was pretty cool to see. So it's nice that, the banks are starting to get more into this. So Standard Bank Group, the largest African bank by assets, has partnered with Hydera Hashgraph, an enterprise group distributed public ledger, and joined the Hydera Governing Council. So Standard Bank will establish the continent's first Hydera network node, which is set to solve some of the sore points that have historically beset the development of cross-border trade. So that's only a good thing. And that's why I said in the previous episode that, there is opportunities in Africa itself. So I think this is really great news for Africa. And I think this is also quite nice to see the banks starting to get a little bit more involved. If we just have a look at the tweet of the week, this is actually from Plan B, and this is his stock to flow model, which he created, and he was actually ridiculed that ridiculous that Bitcoin would get to 1 million, and how accurate this is. And he has been pretty spot on, to be honest with you itself. So it is remarkable how accurate his model has been the stock to flow market. So I'll put the links in there. You can check it out. So it's a nice little graph to have. So this is why you're hearing Bitcoin will reach 100,000. Bitcoin's going to reach 1 million itself. It's really derived from the accuracy of the stock to flow model. So Plan B did a fantastic job. So I highly recommend follow him on Twitter, but I will put the links in. All right, guys, that's just my quick little wrap up globally. Hope you enjoy your evening, and peace out.